Welcome to it. Time to have a look at the markets picture. Asian markets steady on the day as investors digested the trade numbers out of China for May. Those export figures happened to miss expectations. Nonetheless, the Hang Seng down 0.5%. When we look at what's happening on the Nikkei side of things, that up 0.25%. Shares on the mainland Chinese side of things, when we look at the Shanghai Composite, that up nearly 0.25%, but the Shenzhen Composite down fractionally lower. European markets slightly higher, although those inflation fears have managed to put a cap on gains. So we'll see how the market plays out for the rest of the day. US futures flat for now. However, when we look at things on the local front, we had First Rand publishing its trade figures indicating that they're expecting headline earnings per share to be nearly 35% higher. We also had the listing of Thungela Resources, and this is the spin-off that is holding Anglo-American's coal assets. That debuted at 25 Rand a share, but an hour ago it dropped to about 22 Rand 70. But to talk about this and the overall themes in the market, we are joined by Bright Khumalo from Investec Asset Management. Bright, thank you so much for your time. Your overall assessment of the JSE performance thus far?
Yes, I mean, if you look at the JSE markets today, we're down about 1/5%, and the biggest drag to performance today is basically those resources counters, which are down about 0.82%. If you look at the, the red side of things, like I said, we've got African Rainbow Minerals there down 2.8%. We've got Anglo Plat down 2.4%. Pepco Holdings being the only retailer down 2.3% there, but Northern again down 2%. But in the green, it's a mixed picture. We've got Richmond up 1.9%, MTN 1.9% as well, and Absa Group, so a lot of SA Inc. There, as we're seeing also Capitec up 1.4% there.
I spoke about Thungela Resources. What has been the investor appetite from your perspective?
Look, you've explained what Thungela Resources is in general, but there was a research report that was circulating over the weekend from guys called Boatman Capital. This is a short-selling house, basically based somewhere in the United States, basically saying that this was an amazing move by Anglo because with the new NEMA liability laws that are coming to bear in the next month are going to actually increase the closure cost of all Anglo-Americans or now Thungela Resources mines, which some of them might need to be closed in the next decade or so. It's I don't know if it's a fair assessment of the actual law or the liability rules because they're not out yet. We don't know what to expect. Obviously, there is a working paper, but we need to wait before we actually shoot from the hip here. But if you look at the Anglo price on Friday, it does really confirm the fact that it was a good move on Anglo's side because ex-Thungela on Friday, Anglo was up sharply. And today we're seeing that basically Thungela is actually down today at listing. Like I said, it listed at $25. It's at $23, 59 cents. It's not looking, amazing. There's no pop here.
Right. Later on in the week, we have MultiChoice releasing their numbers. Will you be keeping an eye on it or anything specific you'll be looking out for?
No, definitely we'll be keeping an eye on MultiChoice numbers, which, by just looking at the trading profit number and the headline earnings number, they seem to be doing exceptionally well. I mean, trading profit is expected to come between 25 and 30%. Everyone keeps on talking about, other streaming or content players coming into the continent and eating MultiChoice's lunch. But the real numbers are showing that organic growth is growing double digits, and the rest of Africa group is actually, has been the largest contributor to improvement in terms of, their performance as those losses are shrinking, meaning, local content is still very popular amongst Africans, which is good for this company.
Let's move things stateside. What do you make of Janet Yellen's comments on interest rates?
So Janet Yellen basically said that there might be room to start increasing interest rates. These guys are very specific in how they term, their words or their thoughts, so to say. But what it's basically saying is that they do see, rates going up for sure. But I think the bigger thing that they're not saying is that they're seeing a lot of economic improvement or economic recovery. As you know, for example, 50% of all Americans actually have been vaccinated with at least one shot, and this is good for the economy because it means people can go back to work, quicker and faster than most countries that haven't actually gotten their vaccination, in order. And being one of the biggest, or the second biggest economy for that matter, this bodes well for for the country. So that's what it's saying indirectly. Basically, that's what I read from those comments.
Yeah. All right, Bright, thank you so much for your time. That is Bright Khumalo from Vestec Asset Management.
Thank you.
Tomorrow we're going to be talking about those Q1 GDP numbers out of South Africa. And then later on the week, we're going to be looking at those U.S. consumer inflation figures. That's it from me. We're going to take a quick break. And when we come back, we'll have more news for you.